Well, hello, good morning to you guys on this Tuesday, the 11th, actually. We made it, guys. Congratulations. Hope you're all doing fantastic out there in Cryptoverse, guys. Take a little sip of water before we really get started here. Out of the moonshiner's glass. And as always, guys, hope you guys are doing excellent, man. Website continues to come along. The website continues to be updated and look a little bit better every day. So really big props to Scott on doing that. He's been putting a lot of good work in. So guys, go check that out, cryptocurrency.com. We'll be adding a lot more stuff in the days to come. We really want to make it a good hub for people interested in finding good information out there as cryptocurrency goes. Quick update, guys. Still, me and Scott will be speaking at the American Association of Individual Investors, Wisconsin chapter, on January 19th, 2019. I believe we go on at about 10:20. We go on at about 10 o'clock in the morning. So that will be in, Brookfield, Wisconsin at the Westmore Country Club. So if you guys want to come see us talk about cryptocurrency, it is open to the public. So, all right, let's check in with our current trades. All right, see what we've closed out so far. Let's see here, actually. So we did get stopped out of a speculative long on BTC just now, or on XBT actually. Let's see. So far, week two still up about 58%, not doing too bad. Bcash short, Tron short, still in an EOS short. So we've posited pretty good profits on that. Altcoins, not too bad, not too bad. Altcoins have been fairly difficult and finicky to trade lately, but we did get EVX, RDN, Aragon. Close those out pretty good. Some of those are not doing too bad. The long-term position on XBT is still the same, hasn't changed, but that was just a signal for those who entered late. All right, moving on. Let us know how you guys are doing. All right, so I've got some interesting stuff to talk about here with BTC. So let's do the first thing. Go actually out to the weekly. Big picture look at on log as well. So, okay, just obviously, still things in the long term still look fairly negative. Early morning. All right. Things still look fairly negative on the weekly chart. We did open and close weekly candles below, and now we're in our third weekly candle below that. Still looking to sweep the potential low of our last low right now. Fantastic. So currently... malicious upload, man. Hey, thanks, Aiden, for the sub on Twitch, man. Really appreciate that. And that music went on for quite a while. But definitely impressive. I hope you liked that BTC shoot 'em up, man. Thanks for the sub on Twitch, man. I highly appreciate it. All right, so currently our current weekly low is 32.10 on Bitstamp. Test that as the low. Now, I'll get into these lines here in just a second because they're fairly interesting. So taking the long-term view of this, guys, the area that we were attempting to hold up, 36.56, has now become resistance. Okay, so let me stick to my notes here. Sorry, a lot of stuff to talk about. Open and closed our weekly candle below our 2015 logarithmic support trend line right here as well. Also the 200 EMA. Now, I don't put a whole lot of weight on that as I do on lower time frames. So I don't know why it deleted average. So our next key area of support that we're looking at coming up upon is the 200-day simple moving average. Now, why is this important? Well, a lot of traditional traders and a lot of bots and algorithms are going to be programmed around the 200-day moving average. So, looking at the weekly chart now, we already crossed over. It's actually interesting if you go look at the 3-day chart. If you go look at the 3-day chart, you can actually see where those bots and traditional the bots were programmed and where traditional traders were programmed. Because looking at the 3-day, you can see when we do actually cross under the 200 period simple moving average, what begins, boom, down. And of course, we had a lot of other indicators to be short at that point: the falling volume, the bearish divergence on oscillators, the very weak movement of this rally, something that I've been talking about for a long time, which was that significant support around 5,800 to 6,000. Being tested so many times, and when you test support so many times, it becomes weak because support and resistance are like springboards, and the more you test them, the weaker and weaker they get. So here, up on this. So that's actually, this corresponds to the daily. Now, so the next key support level is the 200 simple moving average. However, I will be honest, price is not supporting a strong reversal at that level at this point in time. Now, we see the weekly is still a full-bodied bearish candle. That's all right. So we'll see what happens when we get some interaction around that 200-day simple moving average, which is congruing with pretty much the low. So could we see a sweep and a potential bounce off of that? It's likely. Do we crash right through it? Most likely not. Most likely either a little bit of movement there, either sideways, or a little bit of a bounce. Looking further below that, nothing has really changed as far as our key support levels. And it's a fairly wide range, guys. So if we just look at where volume, based on VPVR and key support and resistance levels, the next area, and it's wide, is 2938 and 2120. That's the next area where we're likely to see some slowdown in momentum on this bearish trend. We'll have to see when we get there, because price does not always react as favorably to our previous key support and resistance levels, but it's all that we have to go off of. So these are key areas. We can see the volume spike right here. These were key areas where individuals were interested in trading. So we expect those areas to be respected in the future as well as trading. What's interesting about that is I've actually taken a fib measurement from the absolute top to the absolute bottom that all the data has on Bitstamp, and it doesn't matter. It doesn't really matter actually whether you measure from, it doesn't really matter if you actually measure from your swing low, which was actually the true low of the last bear market, or if you measure from the bottom, the logarithmic is the same, and that puts your 88.6 Fibonacci retracement at 231.59, which is right in the middle of that likely consolidation period. Breaking down below that, it gets fairly negative. I do have this secondary ascending trend line that actually measures the lows of both the beginning of the last bull market and the true low of the last bear market. That is a much, depending on what position you're looking at, that is a much more negative outlook for BTC, depending on how long it takes to get there. That is going to be intersecting with our next area of consolidation, which is between 1350 and 891. So depending on what your bias is, depending on how low you think you go, there you have it. Obviously, it doesn't take a genius to tell you that there's no confirmed change of trend yet in the overall market structure. So, all right, so I want to take a look. Let's throw up my big picture template. Talk about some. So starting off with the weekly. Starting off with the weekly, looking at TD Sequential, we actually have a 5 of 9. Now, keep in mind, our 4 is typically, when you're trading TD Sequential, your 4 is typically an area where you can see a break in the TD cycle. Oh, sorry, on Heikinashi, because we're always measuring momentum. So it's absolutely the same. And we have broken down past, depending on if this, we already closed one weekly candle below it, but our previous TDST support. So one nice thing about TD Sequential is that if you follow the system and if you follow the strategy, it's not as simple as most people think. It's not just following 9. Again, this was the strategy. This is still the strategy that I would trade in traditional equities and what I traded in traditional equities. Switched over to more of an Ichimoku and supply and demand zone type level with Forex, where I gradually evolved into pretty much primarily day trading with VPSV session volume, which is how I trade crypto. At least on leveraged exchanges. Altcoins, something different in this market structure, anyways. Probably the best momentum that I've found, the best way to trade altcoins, depending on whether you're trending up or trending down, is some combination of Ichimoku. I find is probably your best key indicator. However, I still use the overarching strategy of supply and demand zone trading. It's very simple, guys. Key areas of likely support and resistance. So. We are closing weekly candles below on the Heikinashi and Japanese candlesticks, below our TDST support and below the 2015 logarithmic. All right, so typically when that happens, you are actually looking for a completion of the 9 count to the downside at the very minimum. So depending on how long and how far it takes us to get there, again, we have our next key areas between 2938 and 2120, with a very interesting area in there of 2350, which is the 0.6 Fibonacci retracement of the entire of our entire Bitcoin market. So let's see here. Okay, so we'll go to the 3-day, because this is what people are talking about. So we do have a perfected 9 on the 3-day. Yesterday was a perfected 9 count to the downside. When you get a perfected 9 count to the downside, what you're looking for at the very minimum is 1 to 4 periods of consolidation or correction. We're not seeing that yet on our current daily candle. However, you can see that we are retesting the lows of that current area. Now, whether or not they get swept, we'll just have to wait and see. Have to wait and see kind of also how this daily closes on the volume, but the bearish volume is still fairly strong. The momentum hasn't broken on Heikinashi, and that's the value of looking at Heikinashi, is actually see the momentum of the candles. However, keep in mind that one of the things about TDST, remember we're looking at the 3-day chart right here, so these margins are quite wide. Look at the, again, this is Heikinashi candles. But look at the volatility of just an intraday. If we actually pull up something like average true range, which will measure our average volatility, we can actually see that our ATR is actually $639. Our ATR has been, since the decline, increasing from $400 in 3-day volatility to our point right now where we're actually at $640. So if we were to take the average of that, it'd probably be somewhere around $500. So we're looking at an average 3-day volatility of $500. So keeping that in mind, using ATR projections, where is TD managing your? Frustrating. So actually, another thing that TD Sequential does, if you have the correct script, and again, if you go watch my Trading Crypto 101 video, you'll see that I actually use JD Lim's script. And again, you know, there's no reason to hate on Tone Vase. He's not a bad guy, I guess. I don't really like, I don't really follow him or anything, but he seems smart. He seems like he knows what he's talking about. But one thing that I don't see him talking a whole lot about is support and resistance, some of the more key mechanics. And again, I don't know if he covers that in his workshops, but whatever. If you feel the need to go pay $1,000 to learn what you can learn from a few free YouTube videos and from a $30 Jason Pearl book on how to actually master TDST, which I cover in my Trading Crypto 101 video. It's pretty much just the insights that I've learned from reading that book about 5 times throughout my life. Anyways, TDST has your risk plotted out around 2,400, around 2,382. So even TDST is signaling, or excuse me, TD Sequential is signifying that you have potentially another 30% drop in equity here. So just be prepared for that if that is the strategy that you are trading. Now, if we actually go look at the daily, we have an unperfected 9. Now, the last time we did get a perfected 9, we did see that 1 to 4 periods of consolidation, followed by about 3 more bars of correction before beginning the downward momentum. Now, it is my experience, you can see the last time that we got an unperfected 9 that we just continued the downward slope. So unperfected 9s are not congruent with the TD strategy, but even if you're trading off of this, this is letting you know that your risk level is still about 20% to the downside. So whatever time frame, whatever larger time frame that you're trading that on, non-intraday charts, intraday time frames, it's still signaling that if you are taking these signals on the 3-day or the daily, it's not telling you that, hey, we're just going to go straight up from here. It's telling you that the potential where you want to have your stop loss at is fairly wide. And again, we had looked at ATR and it's around $600. So that's 2x ATR that is projecting down there. The way that risk is calculated, using TD Sequential is that you actually take the true length of your lowest bar, in this case this would be the 9, and then you project that downwards onto from the true low of your 9. So that's a 20%. That 3-day, we moved 20% to the downside in that 3-day candle, and that is where your risk is being plotted out right there. So we'll see. Let's see. So we'll go to the 4-hour chart actually, and now we'll move. All right, so the 4-hour chart. So for intraday trading, meso time frames, we do have a perfected 9 count to the downside, and we've gotten these in the past. Oh, there we go. Okay. Okay. So yeah, we have gotten 9 counts to the downside before, perfected 9. And typically when we see a 9 count to the downside, let's looking. Okay. So we do have one good example here. That's weird. This is. Anyways, we do have a perfected 9 count right here. Candle opens here and closes here, so you are waiting for the candle to close to enter. You did get that 3 to 4 bars of correction, and you got about a 4 to 5% movement off of that. Here, you actually would have gotten a false signal because price continued down, but you would have had confirmation of that as soon as you close one candle below the high of that 9 count to the downside and validates the buy signal. So there's lots of risk management built into TDST, which is nice because most traders, this is their falling point. You can criticize TD Sequential however much you want, but the nice thing about it is that if you follow the risk management implied within it, which to me was the selling point when I first learned about TD, it helps you manage your risk, which is really key. All you can do in the markets, guys, is pick your entries and exits. The market determines if you're profitable. So anyways, interesting here, we do have a perfected 9 count to the downside, and we do have a green candle following it currently. Now we won't know until about 2 hours and 43 minutes until this 4-hour candle closes, but It is shaping up to be a nice hammer candle. Looking at our VPVR, I would expect at the very minimum that we return to the point of control. I would expect that we return to the point of control and test it, which right now is that current order block. So around 3380, 3390. I would expect that if we're going to continue moving down further, that we would go up to test that before continuing. Now, simultaneously, if you were looking to enter into a long position based off this consolidation, and if your bias is still to the long side, well, measuring out ATR, 2x, 1x, and 3.5x to calculate your risk, this would still have you entering, which is still roughly where I'm entering as well. If we go over here to BitMEX, my position hasn't changed at all. This would have you entering, looking for a potential entry. Now, typically the way that I like to do this is that if you're in a period of consolidation and your bias is to the bullish side, well, you know that almost always, especially with cryptocurrency, and Forex is no different. In fact, equities is not any different either, but the movements are less volatile. You're always going to experience a sweep of lows almost because the market wants to move toward liquidity. So in this case, we had a sideways period of consolidation. And if your bias was toward distribution, or excuse me, toward accumulation, then you are looking to potentially enter into anywhere from 10 to 25% of your position at that price level. But you're looking to average into your position as price moves down. And the best way that I've found to do that is through using multiples of ATR. So in this case, using, if we pull open trading on the intraday time, where is ATR? ATR right now is about $92.83. So you would be looking to potentially, let's average that out. Actually, excuse me. So you would look for what ATR is actually in your consolidation period. ATR ranged anywhere from $100 to $112. So let's call the low end and say $100 because that's going to let you more effectively with a more conservative stop, more conservative entries. That would have you, if you're projecting that downwards, you simply take a multiple of ATR. So 1x would be your first entry. So if you're entering 10 to 25% of your position here, again, 10% is better because then you can always double up or enter into the rest of your position on a confirmed breakout to the upside of whatever consolidation range you're in, or looking for breaks of key support. But using this method, you would be looking to enter at a 1x multiple of average true range, which again we looked at was $100. So if this range is roughly, if we split the baby, it's 33.90. Clearly, that would have you positioning for the greater amount of your buy-in around 32.90. I've marked right here, 32.90. So if you're entering into 10% of your position here, you're looking to enter to at least double that here. So now you'd be in about 30% of your position. And then you would be looking to enter, your secondary entry would be a 2x multiplier of ATR. So that would be $200, so $31.90 right there. So you would be looking to enter at least double of your previous position there. This is how you can effectively move your average entry price down. When you only buy one position here, one position here, and one position here, your average entry doesn't move that much. You have to actually double down on the way down. And you have to calculate this with your portfolio management. Again, when you're looking at a trade, I find that the best way, one common way that I'll do entries is 5 different entries, especially if you're trading on BitMEX, because you actually get paid to put in limit orders, which is quite nice. So limit orders there are going to be paying you 0.25%. So, spreading your buyout between 5 different entries gives you a good opportunity to lower your entry. However, the traditional way to do it, and the way that I will also do it commonly, is to split it up between 3 different entries where you're doubling down on each one, and then you're managing risk at a 3.5x multiplier of ATR. Again, I've shown you guys, if you guys have been following the channel, I've shown you guys multiple periods of time where if you're entering into a period of consolidation and you're setting your stop at 2x, you're actually going to get pushed out of the trade before the market does reverse and give you your bullish movement. Whereas if you're managing your risk at 3.5x, you're staying in the trade. And a break of that level is a net negative, yes, of course. But however, it's a confirmation that the trend has actually changed, and it's a good confirmation that you were wrong in your trade. So you don't look at your risk management strategy as there's something wrong with that. No, what you need to go back and focus on is why were you predicting one particular movement to the upside or the downside in this particular situation, and why did you trade this consolidation range wrong? And sometimes the truth of the matter is that you weren't wrong at all. Again, you can only choose your entries and exits, and the market determines if you're profitable or not. So in this particular situation, If you were looking to take the long between this consolidation range right here, which is our current order block and our point of control, if you're expecting a sweep and then a break to the upside, you're looking to enter into maybe 10% of your position here. You're looking to double down at 32.90. You're looking to double down on that at 31.90, and you're managing risk at 30.40. So if we go over to XBT, that's actually quite congruent with what we're looking at right here. So looking at our XBT chart on the smaller time frame, on my 30-minute time frame, what I tend to trade XBT on, I actually have been, again, fairly transparent with my position. I averaged in at 35 on the way down. I doubled up at 33. I had another double up position at 32 and a double up of that to put me fully into my position at 3100. Now I did only get a partial fill at 3200, which I'm absolutely amazed that I even got filled at all, because the low of that candle really did just touch 3200. So only got about a 25% fill on that particular position. And again, taking profits at 3500. Some took profits at 35.50, and then we had measured the upward move at 36.20, took profits on that, and then we've been averaging, we had set our stops above here, so we've been averaging risk on the way down. I'm only about 30% in my position now, and my buys still remain the same, 3,100 and 3,200, managing risk at 3K and 20.50 respectively. So let's see here. So in the short term, we can see we have our point of control right here, which was our area. We have not had really a good retest of that area on solid volume. So I would be expecting at the very minimum that if we're going to continue down, it would be a push back up to this point of control. So around 33. And then we'll be able to kind of tell when we get to that area. If we get a strong rejection from that area, then most likely continue downside, at least in the short term. And if we're able to close strongly above that area, and in the recent, this 200 period simple average on the chart, which has been pushed significantly since we actually fell down from the high, fell back into the block. So let's see. So there is another way to look at this, which I know that some people are looking at. Obviously, we did have a key support area here, which was our previous load zone. We had measured out that inverted head and shoulders on the 30-minute chart that did actually end up playing out for us. We had confirmation of that once we broke above the neckline right here, about 3,400 actually measuring the there, which was the top of the consolidation, which right here when we actually sprung up and then found support around that order block area right along the top of our point of control right there, that was a pretty good bullish sign that we could complete that 3620. We did hit that quite nice. Upward targets still remain the same based on our VPR and key block areas. Haven't had a trend reversal yet. However, this range trade session has not broke either to the upside or either to the downside, regardless of what anybody thinks. Overall, the metrics look fairly negative based on price action. Price action does look negative. Again, we won't have confirmation of continued downside and capitulation below that $3,200 level, which we have been able to hold so far. So we'll see what kind of bullish movement we get after this, because again, guys, we've had these pretty nasty retracements before. We had a pretty nasty one here. We moved sideways consolidation, and then we had a nice movement up, which was actually breaking this point of control range at this point in time. A strong move above our order block, and now we've moved down to retest it. Now, if we get rejected from our point of control now, again, around 3,800, if we reject from that, again, you're probably safer to continue on in your short position. And if you recall, even though I currently am in a long position, I did say 2 days ago when we were up here that I said the best statistical trade right now is a short position, as I hear the screams of everybody in the Kraken Crypto Trading Group yelling at me. However, we've been able to make out quite nicely like bandits over the last few days. So everything in context, guys, everything in context. And again, looking at the 30-minute chart, we also posited in a nice little hammer candle right here. Let's go to the 4-hour chart and see it. Well, 4-hour chart still looking at forming a hammer right here, so we'll be able to see it. Looking at the 4-hour chart, our point of control right here is still around that 33 area level. So I would be looking for, at the very minimum, a push up to that 33 level and either acceptance or rejection from the area before we know whether we're going to down any further. Now, we have not swept this low on the 4-hour chart yet. So we do see this low swept in a descending movement. So we haven't had our low swept at 3,200s. That is the potential. That's the potential long bias that I'm positing here. And then we'll just, again, in the short term, what we're looking at right now for trading action is a movement back up to 33.80, and then we'll see if we get rejection from the point of control, in which case the lower targets and stand for the load zone. And if we actually are able to break through, then that was a confirmed sweep of this low on a retracement. at retesting 3,500, 3,550, and 3,620. A confirmed breakout of that area would be pretty huge right now, because that would be a break back up above our resistance zone right now, looking at our higher targets there. So let's see here. We've got some fairly interesting news this morning. I have not read this, so we'll do this together. The big whale moving nearly $3 billion worth of Bitcoin is exposed. Between December 1st and 6th, 2018, a whale moved a total of nearly $3 billion of BTC between wallets. It was discovered that Coinbase was this whale due to an announcement they made on their blog. The possible reason for the movement could be a reorganization of financial assets, taking advantage of the bear market's low fees. Interesting. About $3 billion worth of Bitcoin from the exchange's wallets. It appears that on December 3rd, 2018, the whale was moving 66,223 Bitcoins from an inactive address that hadn't been used since 2014. The transaction was transferred directly to another address, then evenly distributed among 100 addresses. Interesting. Interesting. But checking out a Coinbase announcement which was made on November 29th, it's highly likely that the cryptocurrency exchange was the one behind the huge money movement. Coinbase stated that the exchange would be running scheduled maintenance across its platform in 7 days after the announcement. According to Coinbase, the maintenance could cause movements on all Coinbase-supported blockchains. Okay. So they're positing that this is Bitcoin taking advantage of the low transaction fees in the Bitcoin network to reorganize their addresses and transactions to move their Bitcoin from legacy wallets to SegWit addresses, which would be a smart move for them as well. However, guys, I can already hear, put the tinfoil hats on, guys. Put the tinfoil hats on. They're moving to OTC and exit scamming. No, I highly doubt that. What's going to exit scam them is their IPO if it's not successful, because their IPO, again, we talked about this the other day when we were reading that Reddit article. You know, what I don't understand the point of investing in a Coinbase IPO, because their IPO, their valuation of their company, is going to be completely congruent upon the price of cryptocurrencies recovering significantly. And just having direct exposure to the asset rather than a company is going to give you far greater returns. So I don't really understand. I do agree with that Reddit article on that point. I don't see what the desire of actually investing in Coinbase's IPO would be. When you could just get physical exposure to the, they're actually going to evaluate more if they do recover. I want to bring this up not because it's very interesting, but because it offers a perspective into the risk management of people who have large Bitcoin relative to their position, relative to their portfolio. So this is the Defiant Winklevoss brothers expand crypto offering, stating we can weather this downturn. Blah 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 blah. So instead of holding up their forces for a brighter day, Tyler and Cameron now employ more people than ever and just moved to some fancy New Park Avenue office. Instead of giving up multiple failed attempts to get a Bitcoin ETF license from the Securities and Exchange Commission, the brothers have changed tack and are now launching their first mobile application and new basket of cryptocurrencies. So yeah, they are launching a mobile phone app, kind of like Robinhood, that will allow you to trade and or invest or whatever in their top 5 cryptocurrencies. Let's see here. Currently available in the App Store and Google Play. It also will let new users initiate KYC proceedings, including facial recognition and other biometric proofs using the mobile device camera. Well, that's right up there with voice-controlled XRP tipping, as we went over yesterday. So, but no, I think this is interesting because it gives you a mindset. It gives you a look into the mindset of an individual who does have a lot of Bitcoin and is prepared to weather the downturn. Why are they prepared to weather the downturn? Well, the reason why is because perhaps not in the case so much of Tyler and Cameron, but in the case of other people that are very bullish, like Mike Novogratz and other Wall Street bulls that are bullish on cryptocurrency, you have to understand that more than likely cryptocurrencies account for no more than 1 to 5% of their total portfolio, and that's why they're able to. Schwartz 88. I know what that 88 means. Anyways, thanks for the sub on YouTube, man. I appreciate it. it gives you, okay, so sorry, I got distracted. It gives you a look into the mindset of an individual. Why are they able to weather the downturn? Because cryptocurrency accounts for a small amount of their portfolio, guys. So this is just a warning to you guys out there. And the reason why is a lot of retail investors are going to invest more than they can afford to lose in cryptocurrency, guys. And I know that this is the first lesson when you guys were probably researching cryptocurrency. And the first thing that you'll hear people like me say, which is don't invest more than you can afford to lose. It is a speculative asset. And regardless of whether you're investing for the long term and for the short term, just keep in mind your risk management, because you don't want this to negatively affect your life. However, you know, it is one of those few opportunities where those who 9,000. Sahib, thanks for the sub on YouTube, man. Highly appreciate it. It is one of those situations where a lot of individuals didn't want to miss the train, and they heard all these. 9,000. Keep them coming, man. Tip top. Thanks for the sub on YouTube, guys. Almost to 1,000 subscribers, guys. Thank you so much. It is one of those situations where, go back to the while I'm waxing loquaciously. It is one of those situations where those who at that point in time, like around 2017, man, it was an opportunity where those who did go hard, it really reaped the benefits. But unfortunately, most of those individuals didn't have good exit strategies. And were able to invest smaller positions of their portfolio to amounts to have returns on equity that would be, you know, gorgeous to the rest of us. They're able to handle this downturn because they're not strapped for cash, guys. So it's a negative situation. It's an unfortunate situation that we've seen time after time after time in the realm of investing and in the realm of trading. I've seen it so many times. And when I started trading and started investing, I ran into the problem myself, guys, because you know, you kind of bite off more than you can chew. You're a rookie in the markets. You don't really know how to navigate the markets or how, you know, just how everything works, man. And there's a bell curve, you know, for knowledge and skill in this particular situation. And it takes you a while to get your chops up, man. And you have to pay the tax to the market. There's nobody that I've met that has not paid the tax to the market, guys. Now, do I truly believe that if you start off on the right foot, with getting it, you know, with getting good mentorship and a good trading group with good people who can give you good support and good outlooks on the market, yes, that will help facilitate your growth curve exponentially rather than just being thrown out there in the cold, not really knowing what source to trust. Because the problem is, guys, there's a lot of amazing information and resources out there. However, there's no way to gauge its validity, guys. I've seen this so many times. Talking to traders, and one day they'll throw me a chart with like moving averages or RSI and Bollinger Bands or whatever, and they're like, okay, cool, and they'll be charting that way for a few weeks, and then they'll take a couple losses, and then they'll be like, man, what did I do wrong? And they'll go to YouTube or they'll go wherever, preferably not Vimeo, but they'll go to YouTube or something, and they'll be like, trading strategies. And they'll be like, oh, RSI and Bollinger Bands, no, that's for plebs. You need to be using stochastic and EMAs. And then, you know, then they'll start throwing charts of stochastic EMAs up. And I always say, like, what are you doing, man? Like, you were doing Bollinger Bands and RSI. Like, what's wrong with that? There's nothing wrong with that strategy, man. Like, is it simple? Yes. Is it fairly effective, especially on longer time frames? Yes. And they'll just be like, no, this is the way. I found the truth, the way, the path, the light. And it's like, come on, guys. Come on, man. There is no truth, the way, the path, the light, man. I mean, there's good, consistent trading strategy that you can battle harden and test over time. And you know, you just got to feel comfortable with your strategy, man. And you know, back test, paper test. But you know, there's really only one way to get good at this, man. That's to do your study. You know, again, I'm not telling people don't just throw yourself in, because once you're in a live trade, there's no taking it back. There's no demo trading. But yeah, man, you do eventually, in one way, shape, or form, you are going to have to pay some form of tax to learn the markets, guys. So you know, if you guys have been hard hit by this bear market, I know a lot of you have, don't keep your positive mentality, guys. You know, abundance mentality, man. Like, this is a natural part of the market cycle. Yes, Bitcoin will go back up. Yes, there's a good basket of altcoins that will go back up. You can recover on the equity that you've lost, or you know, there's lessons to be learned from this downturn, man. But again, one thing that you don't do at this point in time is short the bottom. One thing you don't do at this point in time is sell the bottom, guys. You don't do it, even if we have further to drop, man. Even if we have further to drop. That is how I look at the situation. And I recommend that you take the mindset of other individuals who have longer time frames than you, because those are the individuals that are out in the. That's kind of like the tortoise and the hare strategy, right? You You know, the people that are in it for the short term, they often get burnt out and kicked out and trashed out. And the people that are willing to suffer drawdown, suffer a little bit of equity loss, especially on a fundamental asset that they believe in, has valuation potential in the future, guys. Bitcoin's not going to zero. We will see new highs one day, and all you have to do is be patient and wait and learn from this. You can make a lot of money in a bull market, but you can lose a lot of money in a bear market. But the nice thing about bear markets is that they teach you to be cautious, man. And you don't want to throw caution to the wind, not on a speculation. All right, so let's check in with Mr. Ethereum. Looking at the one-day time frame right here, nothing's really changed on Ethereum. Still looking fairly bearish. Obviously, nothing has really changed on the overall structure right here. We do have this consolidation area, this potential load box between 95 and 85, really, that we're still in, looking potentially to break to the downside, guys. And that's just based off our previous historical data right here. And yeah. So you can see that I've just basically mapped out this area of consolidation right here, where we did have price contraction and accumulation before it pushed back up. So this was an area in the market individuals were selling at. Breaking down below 85, you really have this level 76 that stands out to me because that's a significant swing high, swing low support over here. Breaking down below that area, you again enter into no volume territory. So again, I've been saying it for a while, guys. When you just chew through areas on the way up with no resistance, without pumping any brakes on, and you can see the shallow area of the volume profile, there's no volume in here. So we would not expect that this would be an area where price would be turned around. Just based off historical data. And where do we actually see an HVN? Well, that's between 52 and 41, guys. And I've been saying for quite a while that for Ethereum valued to the USD, we are going to be seeing $50. So that's long-term price target of mine still stands. I've even got the flag there to mark when we get there because we've won the race. Breaking below 76, really $77. So that's 76.97. Let's just alter that to 77 to make it clean for the psychological number. Breaking down below that, we really enter into scary territory where we're expecting to accelerate toward that fairly quickly without a lot of resistance. We'll just see how this plays out. We've posited in new resistance now with our swing lows right now at $101. So again, we've been saying that for a while, guys. We did actually come down. We have a swing low here on Ethereum. We did actually come up to wick off that $100 and get rejection from it. And now we're still in that current block. So obviously things looking fairly negative still for Ethereum, still for Bitcoin on the longer time frame as well. And we do have, again, really nothing below us for support unless we consolidate in this area. If we form sideways kind of rangy movement right here, then we can begin to potentially think of accumulation and look for a potential move back upwards. So until we get some kind of V-shape bottom, strong reversal here, or until we get some more sideways period of consolidation or accumulation here, again, still looking at our downside targets. Going to the short-term frame here for Ethereum. Going to the short time frame here for Ethereum, we did have this little period of distribution right here. We swept the lows, so could we potentially get a movement back up here to the top of this range? Yeah, well, absolutely could, but you know, wishes were fishes, we'd all be drunk. So that's So I guess if you wanted to look at the most positive potential outlook, look here, we do have this ascending trend line. We break down below it on the 4-hour chart, looking like we're going to come up and reject off of it as well. This is also the point of control that we have right here. So looking at a potential rejection from $88, or excuse me, 88, hard to split the baby on this one. 88.29 be our current point of control. Depending on where this 4-hour candle closes, again, we are looking like we're positing in a little bit of a baby hammer candle here. Same with Bitcoin as well. Got the cell phone blown. Hey, thanks, Hayden. I really appreciate it, bro. Oh, that's my news updates. Trump doing something stupid again. Big surprise. We do have this LVN above us right here, where we just kind of gapped through. We did get a little bit of a reversal here, but not a whole lot of volume on it. In fact, more of the volume was captured on this wick right here. So if we actually do close above, if we actually do close this 4-hour candle above like 88.50, 88.20, then potentially a retest of these lows and the top of this LVN. So potentially a bump back up to 90 bucks. And I had actually posted that in the Discord right before we started this whole shlangamarang. I said that Ethereum looks like a potential retest of the point of control at $90. And again, we can see here, even on the 30-minute chart, we have this nice little hammer candle formation. And we do see a little support area being here. But again, anytime you're seeing a sideways period of consolidation, you are expecting your left. Now, again, my Ethereum position hasn't really changed. I did the last position that we took. I bought at 88 and scaled out at 94, 95, and 96. And again, I had stop limits set for 94, 95, and 96. And I bought right around here, right around 88 right here. And suffered some significant drawdown, not going to lie. But then my orders didn't take at 94, 95, and 96 because I had the trigger set too tight. So whatever, I just doubled back down when we hit this, when we hit the order block again, and then set them as limits and was able to actually there. Currently still looking at 83 and 80 for potential trade setups. However, this did look like a nice trade, especially our chart. We are right here. And again, guys, we can see that although you can trade it quite well. Again, guys, we can see that we haven't swept this low. We haven't actually captured below this low yet. We did have this period of sideways distribution, and we did sweep the low. So if we are going to move back upward, we would expect at least a retest of where the point of control actually right now is at 90 bucks. We've got an HVN that we've got to overcome right here. Same thing on BitMEX actually. So on BitMEX, a close above 86.44, 86.50 on this 4-hour time frame. We got about 2 hours and 16 minutes. 4-hour candle closes. I would be expecting a potential push back up to at the very least 88 bucks. Even better would be $90 for a strong rejection or acceptance. And Ethereum, we see the absolute thing. Actually, we have our we have this bearish order block that was bearish right here. We've been able to get over it as well. If we are able to get above this bearish order block, so a close above like $96, $97, would be expecting us to actually move up to about $100 to test this. All right, guys, let's go take a look at Ripple. Oh, actually, oh, shoot. All right, so here's XRP valid to the USD. And again, we were holding up pretty nice there for quite a while, guys. We were kind of bullish on XRP there for a while. But then we broke down, man. We absolutely broke down. And we were consolidating around the 786. That was back here when we were talking about that about last week, a week and a half ago. And I said, yeah, we got that unperfected 9. Doesn't look really great. Expect maybe a couple week, 1 to 4 candles of consolidation. We did have that 1 to 4 candles of consolidation before we actually broke that low and continued on downwards, guys. Now we are below this area that I'd posited out for a while. Again, I had the flag on there. This hasn't changed whatsoever. We actually broke down below our true low of the area. And again, I said that if we break below this flag area, this is a gap trade range on very little volume. And again, so the next period, the next areas that we have, our next order block is actually 26 to 28 cents, 26.3 to 28.5 cents. I'm not seeing anything that's going to make price nut. Still looking at least potentially right now, another potentially at least 5 to 13% downside. Value to USD. Ripple Bitcoin. Ripple Bitcoin right now doing that kind of sideways down sloping boogaloo. I don't see any reverse in bearish movement yet whatsoever. Something interesting on the daily time frame is that we have tested the 55 period EMA once, twice, three times, and it's held up. So that is our bullish momentum right there. So we still have the bullish momentum. Looking at VPVR, we're probably looking at the very minimum more downside movement here, at least to retest the 55 EMA. Our point of control right here, HVN, because as you can see right here, we were consolidating in a HVN, as right here. We were consolidating in an HVN. We've broken down from it, and look where we're pumping up to, and looking like rejection from the HVN. So we don't really have support on XRP BTC till we move down here. Start plotting these out. support here fairly. There we go. More significant support there. So potentially in between these ranges, but really the current order block is actually had some kind of significant period of consolidation. So we'll look for a potential load there. That would be a retest of the 55 period moving average. So I'm still expecting more downward move from XRP BTC. Now, if XRP BTC, or excuse me, if Bitcoin does actually break down from here, I would actually expect XRP, at least in BTC, to continue to move up because people have been hedging their BTC losses. And well, we also have this descending trend line right here that is measured from our tops right here. Yeah, and that's measured in a 4-hour time frame, so that's why it's a little daily. But that's looking below us as well. So if we actually measured it on the daily, yeah, if we actually measured it on the daily, we can also get a little bit more of negative bias right here because Ripple hasn't been able to break out of this yet from downsloping resistance top here, and we're actually right under that end trend. So the fact that price is tightening up right underneath diagonal resistance line can be considered positive, looking for a potential break, but we won't have any confirmation of that. So we actually are able to start closing candles again above a period that we just rejected from our HV 975. So just looking at supply and demand, guys, looking at a retest of our 55 EMA and these support levels right here, with being really your 2x ATR multiplier, probably managing. If that doesn't hold, then the next area that we have for support is this consolidation area, which would be our 200 chart as well. So everything looks pretty bearish, man. Everything looks pretty bearish in the midterm. So let's hop on over to the chat, guys. While we hop on over to the chat, pull up Mr. XBT and see if we're going to be Kangs or not, man. Man, a lot of chat, dude. This is going to take me a while to chew through. Hodl Crypto, hey, man. Thank you so much, bro. I really appreciate that support. Ben Joseph, how are we doing this morning? MT Coiner, man. How's the work going? Scott, as always, man. Repping the moderator. How we doing, man? Cracking Crypto family. Joey V, what's going on? Good morning, brother. MT Coiner, thanks for the like, bro. Christian Devick, man. How's Croatia treating us, man? Excuse my French, asks, are we in a daily bear flag? Yeah, actually, I know somebody who was kind of talking about that. I guess kind of not a whole lot of data to chart that out on. It could be potentially seen as one. Again, I'd prefer to probably look at that on a lower frame. Let's see. Well, you're closing below it on the 4-hour time frame, so that's very congruent with actually what I've been saying, guys. A return to that point of control and rejection if that bear flag completes. Again, I'm not really so sure about it, but I'll take the actually we're measuring the flag. Just measure candle body closes. So that's actually predicting another 12.73 downside, and if your breakout point was right here, that's actually putting you around 29.38. 29.38, which is actually going to be so that's also based off historical. Yep, so looking at BitMEX data actually on the daily chart, we can actually see that that is our next potential consolidation range, the very top of it as well. However, I think that if we do break that 3K consolidation area, unless we see a stop loss hunt up to the upper nines, maybe 2850 to 2900, then most likely we're probably going lower. Again, with that key area that I had pointed out here at 2120. So, but that would be the measured move if that is a bear flag. But I'm looking for these lows to get swept, and again for this order block to get crashed through. Oh shoot, guys, I'm sorry, man. I forgot to move my mic, so I apologize for that. Wow, I've been going for like a frickin' hour, man, and I didn't have my mic over in front of me. You guys have probably been screaming at me too. Sorry about that. Now you guys got to turn your volume down. Sorry about that. Sorry about that. Sometimes I just get going on a roll, man. Crypto Angler. Altcoins seem like no matter how good the news, they are still bearish. True as that, my friend. Brandon Murray. Hello, man. How you doing this morning? I think we will have enough time to collect cheap coins until new all-time high. Cracking Crypto Toe. We still going to drop? Should I stop out of BTC? That's not the trade that I'm in, brother. I keep getting Morgan Stanley and Robinhood ads in my Instagram. BYC bottom is 682, so buy your own coin bottom is 682, meaning you should only buy 682 coins, man. I want a bull run, but if BTC goes that cheap, I'll be mega happy. Absolutely, man. So will I. The other day, someone pointed out that my last name backwards is I'm a gay. Yeah, I get me. Oh, man. Gag me. Rich spiritually. Amen. For real. Brandon Murray says we will see 1 million USD BTC. Hey, right up there with John McAfee, man. Hey, Gabriel, how we doing, man? Hey, Hans Hemskirk. How we doing, man? Just in a bad hair day. Maybe. Yeah. I have a yacht and a helicopter too. I play with them in the bath. Guys. No need to fight, man. Jurgen Ernst, thanks, man. I appreciate that, brother. Ray, how we doing, man? In the Hauser, brother. Yeah, Gabriel, I was watching that too, man. Like last night, it looked like somebody was pushing it up with a 1200 BTC buy order on Finex. Yeah, somebody is definitely trying to stem the tide over there, bro. Brandon Murray says a 10% chance going to 1K, 60% chance will bounce for 2,900, and a 40% bounce from 2,400. That's not too bad. Given standard deviations, that's pretty much in line with what I'm seeing. And a negative to the fifth decimal place, the Bitcoin will die. Avin Corpasis, thanks for the sub on YouTube, man. Welcome to the fam. Are we all short Ethereum? Mark D says it would be a good hedge, man. But if BTC moves up, then Ethereum's going to follow it as well. So we're looking at the daily here. Let's go to the 4 hour. Now I do think it's probably. Oh yeah, I wanted to point this out. Probably going to get yelled at again for showing. I think it's a really good idea. And this is something that Alex and I were talking about, man. But I want to give the full credit to Alex because this was actually his valuation. So if we actually go back and look at, let's look at Ethereum, Bitcoin. He says, you know, he brought up the point that he's like, hey, look, man, even if ETHUSD and BTCUSD go up, Ethereum Bitcoin's still likely to move down. And why wouldn't it? Because wouldn't it more likely move back to a 2016 valuation of Ethereum Bitcoin? And I thought that was a really key point. So actually, we have to look at ETH BTC on Finex to actually get that kind of data. Yeah. So looking back to a 2016 valuation again, and I think that's very congruent, man. At least down to these lower areas. So this order block right here on Finex, so in between 22,249 and 24,129, that's actually the next potential area of support that we're likely to pick up on here. Below that, it starts to get kind of negative, but we do have a lot of consolidation here in the early days of Finex being listed on, of Ethereum being listed on Finex. But in the run up, we didn't have a lot of consolidation, guys. So I think if this area breaks, if this order block breaks, then we're most likely going to go all the way down here at the very least. So Ethereum could still get much lower, but if we drop down this low, I'll be very, very speculative of Ethereum to Bitcoin, guys. And again, it might not even matter because it might just decouple itself, but highly unlikely because that would mean that Bitcoin would have to be fairly valueless as well. We do have this kind of a falling wedge type pattern, but I think this is probably going to break to the downside actually because I've seen patterns break up, down, left, right, sideways. This doesn't look quite bullish to me at all. Now we could get a little potential bounce up here, but now we do have this resistance at 27508. So if you are going long on ETHUSD or XBTUSD, I think it's a fantastic idea to hedge by shorting Ethereum Bitcoin on the December contract. Just throwing that out there. May or may not be what I'm doing. Hey, Mark D, you've been talking about MBEV on NASDAQ, man. Good trading, dude. $88 keys on a piano. You guys are funny, man. Mark D, yeah, having a long-term short on Ethereum probably isn't a bad idea. Again, that lower price target that I was talking about for a long time has been 50, so if you're able to stomach potentially a recovery bounce here, then you'd be good. But again, I'd just be waiting for, if I was looking to enter into another Ethereum short, I don't like to short the bottom of any movement, guys. I like to wait until we get a nice bullish impulse. So in this case, I would be waiting for a retest of this order block to enter into a short. Even better, a retest of this order block, because that gives you good areas to manage your risk, guys. If you enter into a short here at these levels, then the only place that you can set your stop is somewhere in this area, and that's really terrible. And more than likely, you're just going to get stopped out when price pumps up to sweep this high, which really is your opportunity to enter into a short, guys. Even if price looks very negative, like I prefer to just wait if I missed my entry at a high point to enter into a short. I never like to short the bottom because this is exactly what everybody did here, and look what's happening to them. Prodigy, man, thanks for joining us, brother. Yagami's glaring. Gabriel, thanks, man. Yeah, it's all about the mindset, brother. I still remember you screaming, cancel all orders, cancel orders. Yeah, it's a joke, man. It's a joke. That's a meme. That's a, what's his face? Kramer. It's Kramer from Mad Money, screaming, cancel all orders. Yes, it's a joke, dude. Jesus. Yagami and Stash, man, get a room, guys. Yeah, for real, guys. Yes, XRP. Douglas says $3,400 BTC coming soon. Looking for a short squeeze. Let's go look at our longs and shorts. Back in that death box of longs and shorts here, guys. So we do get a little bit of a spike up here. Let's extend our best fit line here. So broke back down into the channel. So we're going to see if the shorts actually get rejection from this area as well. If it's just a little bitty baby death cat bounce. We'll see here. We'll see. Back in that death box. Historically, shorts don't make it very high above the death box. So again, this is what we're looking for though, guys. We're looking for a short squeeze like this, where everybody gets squeezed. So far, all we've really seen is bottom shorters getting squeezed, guys. All I've really seen is bottom shorters getting squeezed. Let's go look at longs. Long's pretty high on Phoenix right now, yeah. We broke above that that previous resistance point that I had charted out. And I said the measured move from this was at least up to here, guys. And a break of that would actually be a break of this channel, and we'd be looking at this resistance point up here, guys. So pretty nice, good growth from the longs right here. Pretty nice, good growth from the longs up here. Now, unfortunately, we are oversold on the RSI. Now, again, the RSI can just continue to get more, overbought. We can just continue to get more overbought. That's absolutely fine. But just looking at historical data, guys, plotting the RSI onto our long data, every time that the RSI becomes overbought on the longs, we do have a pullback in the shorts. We have a pullback in the shorts. Here you actually see we do get faked out, but you do post bearish divergence from the side of this side, so you are oversold, or overbought. I always say the wrong thing, dude, and I've been doing this for 10 years. You do post bearish divergence right here, and then you do actually retrace quite a little bit. So we'll see how far we retrace. Again, the last time that we got that bearish divergence, we peaked back down and then came back up to test, and price and longs were still continuing to move up. So we'll see if we can't get a repeat of that pattern, or we'll just see how significant this pullback is, depending on how long it takes. Gabrielle says, I almost bought 10 Bitcoin for 45 cents each sometime in 2009 or 2010 after hearing a podcast about it. I didn't because they wanted my social security number for the purchase of $4.50, and it was more of a curiosity, so I didn't, man. Hey, that's all right, dude. Listen, we all got stories like that, man. If I had a time machine, bro. Unknown asks, what indicators is that with the numbers 9, then 4 candles consolidation that I use? That's TD Sequential, my good friend. I have a full video on it if you check out the channel on YouTube, Trading Crypto 101. Again, it's everything that you would learn from paying Tone Vays, $1,000 for like 8 hours of your life. You can learn in 1 hour. There's a lot of other good videos out there, but I haven't come across a good comprehensive one, so I made one. So there you go. And then the script that I use for actually TD Sequential is JD Limbs. So the link to that, the link to his Telegram and to his TradingView script is in the description of that TD Sequential video of mine. XRP just started getting used for real last night by some Japanese bank, like it's adopted, man. Yeah, one Japanese bank, guys. One Japanese bank. You heard it here. Adoption's coming, man. I feel you. So they're using XRapid. So they're using XRP for XRapid. More than likely, again, we talked about this a while ago. So yeah, they're probably going to be experimenting with it for cross-border payments. I would be interested to see exactly like how they're utilizing that, whether they're hedging like 50-50 for the cross-border payments and potentially playing with it. But I love the concept of trustlessness, leaderless movements that emerge into productive change. Easier said than done, but even the idea is liberating and changes our linear hierarchy design angle. Man, getting super deep on us. Yes. Yeah, I mean, that's why we got into Bitcoin in the first place, guys. Like, the reason I got into Bitcoin in the first place is because I didn't want the government to have an access to take my money. I like the idea of being my own bank and securing my private keys. Plus, just the life-changing way, guys. We are going to look back in like a decade or 2 decades. And you know, like Andreas Antonopoulos says it quite well, guys. You know, the way we we rewrite history to shape the narrative as the future progresses. So, you know, we look back and we say, well, the automobile, you know, Henry Ford invented the automobile and everyone rejoiced and the world was a better place. But if you actually go back in time, you know, the horse and buggy, Inc. was probably very negative against this automobile thing that they had invented, which now has completely changed our lives and we couldn't see living without. In fact, if you actually go back and look at all the laws that were passed against automobiles, especially in the UK, like the Red Flag Act, you know, there were so many attempts to kill and stifle the innovation of the car. Henry Ford was ridiculed for years, and yet we look back and hail him as a hero. Same thing. Thomas Edison invented electricity, and he was instantly hailed as a hero. No, I mean, the dude was ridiculed for a long time for electricity, and nobody thought it would be adopted. The internet, nobody thought it would ever scale, and yet it scaled. It scaled because technology improves, guys. So one day we're gonna look back and we're gonna tell our kids, one day Satoshi Nakamoto invented Bitcoin, and the world rejoiced and immediately adopted it. That's the story we're gonna tell to our to our grandkids, man. That's the story we're gonna tell to our grandkids. Everything in between here and there is just window dressing. XRP Roshi, man. Hey, thanks for joining, brother. Will BTC go to 4K before the drop? I'm inclined to think so, yes. Ooh, Gabriel, keeping the live day trading going, man, with BSV. Nice. Over 9,000! Muzumil Riaz. Hey, thanks for the sub on YouTube, man. Highly appreciate it. I don't know. There's some potential things, man. I really like that Raiden pop last night, man. That was a quick one, dude. We got in and got out on that baby right there. Yeah, I posted, again, I wake up at about 4:30 every morning, take a cold shower, drink some coffee, and then I post signals up, guys, for the Kraken Cryptocurrency Trading Group. So if you guys are interested in checking that out, guys, more information is in our Discord and on the Kraken Cryptocurrency website. You're continuing on with the chat, man. Crypto Angler, hey man, thanks, brother. Hey, sorry guys if I blew out your speakers, man. Gabriel reminds me when I did public radio days when I once did 10 minutes. Yeah, man, I feel you. If you are light, who is I? Hey, Sajad from PK, how you doing, man? Think Leader, hey man, how you doing in India, man? Texas Blues, brother. What's up, brother? When a stop hunt happens, is it exchanges or whale smart money that make it happen? It's not market makers. Market makers don't give a damn. It's smart money, dude. Generally, the way that a stop loss hunt will happen is that whales will set limit orders for shorts. Meanwhile, they'll pile on to either limit orders or market longs, anyways, to suppress price down while they're buying up spot price to hedge, and then they'll suppress price down and just continue to move that order wall down lower and lower and lower, and continue moving the buy wall down. And they're faking out traders that are playing the order books and don't understand all the spoofing that happens on Bitcoin. And then at that critical moment, they'll just once shorts get triggered, once stops get triggered, because they'll just push price down. It happens when you're in a consolidation area. So I'll give you a good example here of what a stop hunt looks like. Let's see here. I mean, you see them everywhere. AKA sweeps. So, I mean, this is a stop hunt right here. I mean, you see them all the time. This is a less dramatic one, but you have a period of distribution right here. And you know it's distribution because price went down afterwards. But you have this period of consolidation, and you can just see it because price is flat, sideways, and you have a high value node. A lot of people are looking to go short on this market. A lot of people are looking to go short on this market because that's the highly statistical move to continue on the bearish downtrend. But people want to get in for the best price. So what they'll do is, in this case, They'll just set big ass limit orders up here, and they will push the buy price up to hit stops, which are going to be right here, or right above price, somewhere around here. Stops are going to be placed throughout here for people that are for people that are going short, and so they'll just set their sells at something like a 2x. So this is why I bring up ATR a whole lot, guys, because you can use ATR to avoid getting stop hunted, because what you'll typically find is that most people will set their stop 1x ATR away from price, which tends to be, because most people don't use ATR, and they should. Most people will set their stop around, like, they'll just look, okay, they'll be like, okay, what's the swing high? And I'm just going to be like, set it a little bit above that, okay? Typically, just with eyeballing it, that tends to be like 1x ATR. So just ATR, just the value of ATR. So what you actually want to do, though, is you actually want to set your buy. If you're looking to go short in this consolidation period, you're always predicting a stop hunt. So you actually want to set your sell 2x ATR above market price, in which case you'd be setting it right about here. And so most people are thinking, oh, well, price is never going to go up there. And there are situations where you don't actually get stop hunted out. Or excuse me, there are situations where you are not going to see a stop hunt. Hey, 91 per can. Thanks for the sub on YouTube, man. Thank you. There are situations where you're not going to see a stop loss hunt. However, they happen so often in Bitcoin, they're the best ways to trade, especially if you're scalping. So you can use all kinds of different metrics. But another way that you can use the metric is if you're in an HVN and consolidation, you're simply looking to target where the HVN stops off, and you could set a buy there. And how are you managing risk? Well, you're managing risk at ATR at a 3.5x multiple of ATR. So just to give you a live example in this particular situation, we've got ATR up. So this is Ethereum right here. Area is let's see here. So just in this consolidation period, we can see that ATR is around $1. Okay, we can see that ATR is around $1. So and let's see, what's the average price for that? Where's the point of control in that consolidation range? It's at $110.24. So you would want to actually be setting your buy at 112. Or excuse me, your sell at 112. Bam, look at that. And where are you managing risk? You're setting it at a multiple of ATR, so that's $3.05. So what did we say here actually? 110, so you're actually managing risk at 113.5. Bam, look at that. So you're actually entering at your 2x multiple of ATR right here. The other way to do it, which I will typically do too, is to actually have a small buy at 1x ATR just in case, just so you don't miss the train. And so 1x ATR in this would be 111. Bam. So you'd get a partial fill right here, and then you get a more significant fill right here, and you're managing risk at 113.50. And then you can just go off, you can just, look for a 2x multiple to the downside for your target. So 2x and 3x, 3.5x or 5x, depending on how strong you think the trend is. But I'll typically use either I actually don't use multiples of ATR when I'm looking for target projections, although it's a good way to trade. Having fixed risk and reward like that is quite nice. So in this case, you could just set your target for a 2x multiple of ATR. So 110, you're looking to target 108. So you would have gotten filled here, and you would have gotten a 3.53% play. So 15% on 5x, actually higher, 18.36 on 5x, a 33% trade on 10x leverage. And you're managing risk, so your risk level right there is fairly low. So that's a good risk to reward ratio right there on that particular play. So that's a good way to avoid getting stopped out, guys. Is to set whenever you're looking at a period. Yeah, that's a good 2.8 risk to reward ratio. So whenever you're looking, that's how I trade, man. And that's how I calculate my entry and exit boxes that you guys have seen me do. On what did I look at yesterday? Like XVG, I think TRX. No, XVG. I've done a bunch of them. I think AGI USD actually. I just did one yesterday. Thought I did. Just one I did. I didn't lose. Oh, I know why. Because this is the wrong window. Be over here. Boom. Yeah, there we go. So when I'm calculating entry and exits, I'm always using ATR, man. So in this case, I'm just measuring from a swing low, and I'm projecting out 1x ATR to the upside and to the down. Actually, the way I do it is typically I'll project. So here's my median line. Here's actually the swing low. So I will typically project either 1x up and 2x down for ATR for where I'm looking to enter into that area, and then I'm managing risk at 3.5. Same over here. I've got another swing low, so this is aggressive and conservative, and you can manage risk in the conservative area. You can manage risk at actually the boundary box, or if you're looking to enter anywhere in this area is fine. It gives you 5 entry points, so you can actually have an average entry here at your median. So you can enter 20% here, 20% here, 20% here, 20% here, 20% here. We'll give you an average entry right here. Or the better way to do it, I find, is doubling down on the way down. So you just have to figure that out with your portfolio allocation. And then you have from your median line 3.5x here, 3.5x here, managing your risk. And that's going to keep you from getting pushed out and let you know that the trend has strongly reversed. And doing this with altcoins is painful, guys, but there's no other way. I don't know any other good metric to do it, guys. I don't know any other metric that's been as successful as this for me. And again, when you're looking at risk management, you're just talking about position sizing, man. So yeah, so 20% of what? Are you putting 10,000 into this trade, 5,000, 1,000, 100? How are you managing risk? You're managing risk in altcoins. You're managing risk with a highly volatile asset by how much money you're putting into it. That's how you're managing risk. Other than that, you just have to manage risk along some strategy, and that's how I manage risk, guys. It's worked for me for 4 years now that I've really been using ATR. And sometimes, bro, sometimes stop loss hunts happen just because they're not manipulated up or down. Sometimes they happen just because sellers are getting exhausted. So people are just opportunistically figuring out key areas of the market to set large limit orders. And so like see here, for example, you're going to see a period of distribution and everybody is going short in this area. Again, you're using the same like 2x ATR type strategy here. And then price is moving down. And so right here around these levels, retail tends to act in concert. So you have a lot of people shorting the bottom, thinking that they're FOMOing into the short. And all they're doing is they're providing liquidity to people that actually put their long into a 2x area right here. So if we just look at the way that I would strategically think about this, like, again, what's ATR is like 98. So this isn't going to be a good example. So going back to here, this consolidation area, we have $100 range right here. So you'd actually be looking to enter into, yeah. So this isn't a good example on the 4-hour chart. Let's go into the slower time frame and see if we can see it. Okay, so average ATR around here is about $30. Okay. So you'd be looking to go, if you're actually looking to go long, then yeah, you'd actually be wanting to set your buy around $60 right there. $60 from the median line at 33.80, so around 33.20. So you would not be going long here. You'd actually be going long here at 33.20, and you'd be managing risk at 90, so 2,900, or excuse me, 32.90, and that would have kept you actually a little bit more because it's 3.5, so 32 like 65, and that would have kept you in the trade. That would have kept you in the trade. It kept you away from the stop loss hunt. You would have entered right here and you'd be in profit right now. You'd be about 10% profit at 10x leverage. So just the other way to think of it too is that, you know, where would people with large positions buy, or where would a smart person buy? Well, they wouldn't buy in this consolidation period. They would actually be looking for the stop loss hunt and looking for the best optimum entry point, because you have to think like large orders need liquidity. So they need a moment in the market where a lot of people are pressing that short button so that they can stock, so that they need to feed the long position. There's not enough liquidity generally. Hey, Todd, thanks for the sub on YouTube, bro. Welcome to the family. So generally, there's not enough liquidity in the market if you have all the whales trying to enter at once, or any whale trying to enter at once, it can be an issue. So they're going to need a moment in time, a perfect moment in time, when there's just enough liquidity to provide them. And look at the volume spike on this candle right here. That is shorts. That is people bottom shorting the market. That is retail bottom shorting the market, and smarter traders getting their longs filled, because they need that spike in volume to actually provide liquidity to their positions. Otherwise, they're only going to get partial fills. So that's another way to think of it too. Dave Tech, California. What's going on, man? Mining is boring right now, as I am sure it was in 2013, 14, 15, and 16. Paying dues. For sure, brother. Opinion about Plus Token, decentralized exchange, and the hype around it. I don't know anything about it, brother. I'm sorry, man. Over 9,000! Gregorio Flores, thanks for the sub on YouTube, brother. Keep them coming, guys. They are taking over, man. Wake up back. NASDAQ, PayPal, Coinbase deal. The big rise will come when the controllers are completely in control. They don't want I assume you mean decentralized. Yeah, I agree, man. Well, you're gonna have this, but you know, one of the nice things about cryptocurrency is that they're gonna try to control it as much as possible. But the more it's kind of like wildfire, man. Gappy13, thanks for this on YouTube. Like, look at the internet, for example. Like, a lot of people think like, oh, well, it's completely centralized. Google controls everything. There's all this surveillance and there's all this absolute control over everything. Yes, but you still have people who are continuing to expand on privacy. You have things, you know, you have all these revelations like Edward Snowden. Like, it's very hard on Pandora's box, to close the lid on Pandora's box. And even though like things look fairly negative as far as like corporate takeover and just governments running everything and 1984 type shit, it's very hard to close that lid on privacy and decentralization and security, man. So you still have to fight the good fight, man. And there are great people out there who are fighting and making privacy and security better every single day, man, and looking to get the claws of the government out of things. And we just have to continue to breed that mindset and breed that kind of person. Hey, Jibbles, how we doing, man? If BTC doesn't reach new all-time highs within the next 48 years when I retire from work, then I'll admit I was wrong my whole life, and until then, I continue to buy. Electronium rich, man. Good looking out. Yeah, Scott's mining rigs are like way boring dead, man. Looking to switch that over. Yeah, X42 is launching their network update today. I have to update probably after the stream. I got some interviews, so I'm glad I woke up, you know, again, I got all my charting done this morning. So all the positions are out there. You know, my capital is spread out to where I want it to be. Nothing's really changed for me on the Ethereum or the XBT play, at all. There's a few other things that I'm playing on, BitMEX, but look for $1,200 by July, says Russell Dickey. Damn, right on, brother. Were this many people so eager to buy cheap Bitcoin during the last bear run? No, they weren't. No, they weren't. And that's why it was, maybe it was them. Sorry, no, not maybe. That's why they made out like bandits in 2016 and 2017. Hey, Texas Blues, no problem, man. Yeah, that is the biggest thing that I find, especially in the trading group, is people come in and they use hard stops. And it's right. Shout out to all the people in the trading group, man. I say it all the time, but I trade on the 30-minute time frame. Trade on the 30-minute time frame. I don't use hard stops. I don't use hard stops. I use stops as mental alerts. I use trading view stops. And that lets me know to, hey, watch this area. And if we close a candle below that area, then I look to stop out. But I don't get wicked out, man. Do I get the ATR calculation from the trading view tool? Yeah, it's just a simple way to do it, man. Like, so I have average true range right here. You can find it just by going to indicators and just typing in average or ATR. It's going to be the first. It's a built-in one. You can also see that I use, for altcoins, I'm still actively looking for somebody to make a script that will calculate in crypto, like down to very small percentiles, because ATR, you have to like zoom, and it's just so annoying. It's like almost impossible to do. So if somebody can come up with an ATR that reads down to the 8th decimal point, that would be fantastic. I would even pay you for that. Should be fairly simple to do, but I'm not a coder, so out of my league here. Again, I just have fantastic tools that people have made for me. God bless them. So you can just open up the data window, which is the third icon down. So you have your watch list, your alarm, and then your data. And then if you scroll down to the bottom, you guys can't see it because I have it cut off, but it's underneath moving average here because I have my screen cropped so that it actually fits here. But underneath moving average here, you'll actually see where it says ATR. And then if you just scroll, that data will change to whatever candle you're looking at. So then down here, so say you're looking at whatever range you're looking at, you want to calculate ATR, which is again down here based off that. Again, you can like just scroll your cursor over and like kind of like figure it out. Okay, so we can see like ATR is like 25, but I like to be fairly precise, and then I actually pull out a calendar and do multiple, or not a calendar, a calculator, and I'll do multiples of that. So I'll figure out, okay, where's price at? Am I in a period of consolidation? What is my directional bias? Do I want to go long or do I want to go short on this? Okay, I want to go long. I'm going to set my buy at 2x, whatever ATR is, times 2 below price, and I want to manage risk at whatever ATR is times 3.5 below price. And then I'm looking to take profit at 1x ATR, 2x ATR, 3.5x ATR. That's a common strategy to do it, man. Unlimited champion. Am I the only kid here? Probably not, man. What is that volume indicator called on your chart? It's called volume profile visible range, and that is available here in indicators. You go to volume profile and it's visible range. But you need to have at least a pro subscription to TradingView, guys, and it's free for 30 days, so go check it out, man. And you also get 50% off if you wait till the end. Yeah, I'll look at Poly, bro. Of course, I'll look at Link for you, Yagami. Anything for you. Hey, Flores, thanks for joining, man. Yeah, I really like that. Hey, Caribbean Crypto Show, what's going on, brother? Do I think December is the worst month for all financial markets? Well, so far it is. Actually, October was really bad, but yeah, December is shaping up to be... I don't know. December's looking like it could potentially be a little bit better, man. We've had a little bit of recovery here in December, man. We've had some nice bullish movement that we much more significant than we got up here. So, we'll see, man. The traditional markets look like crap, so kind of worried about Bitcoin following them down. That's why, again, I'm hedged. I'm in the position, but it is what it is. But even if I'm wrong, you see, you guys got to like look into this because people are like, oh, Justin, you're long on XBT. You're gonna get stopped out. You don't know how to trade. You're a terrible trader, man. You're gonna lose all this money. Okay, well, keep that in mind, like portfolio allocation, guys. Portfolio allocation, risk management. I'm not just playing XBT. I've got altcoins that are hedged against this. I've got shorts in Ethereum, Z18 that are hedged against this. I've got, I'm looking at positions in Ethereum that are hedged against this. I've got positions in Ripple that are hedged against this. Like, it's part of the structure, man. It's part of everything. And honestly, like, even if I stop out on this, like, it's still a wash compared to the money that I've made off the altcoin scalps that we've done. So, Nout Van Cheers. Hey, man, I'm a 17-year-old kid. Right on, brother. We've got another kid over here, man. That's pretty fascinating, man. Like, that's what's cool about these markets is that, you're able to come in so young. So shout out to you guys. Yeah, it's 12:30, well past the break time, guys. I'm going to take a 1 to 2 minute break. Come back. I'll look at Link and Poly and whatever you guys would like me to look at for another half hour, guys. And then I gotta get jetting. 1 o'clock, gotta cut it out. So I'll be right back, guys. Don't go anywhere. guys, we're back. Thanks for sticking in there, guys. All like 204 of you. Fantastic. I don't have the metrics for Mixer and Periscope. I don't have the mixers. I don't have the metrics for that. There's no like view counts, and I would assume that we don't get a whole lot of play on those. You know, YouTube, obviously we get a lot of viewers on YouTube. So thank you guys, every single one of you guys. You guys are fantastic and awesome. Thank you so much for supporting the stream. Again, we're here live every morning at 11 a.m. Central Standard Time, and we'll do some announcements at the end of the show and go over some news. So I just wanted to close those out. Oh, another thing that I wanted to point out, guys, we didn't even look at data metrics for Bitcoin today, guys. Freaking slacking, dude. Sorry. Let's look at our data metrics. This is actually pretty interesting. Looking at our historical market depth, which is MDR, which has become one of the key ways that I screen for plays. Looking here, we still see that bids and asks are rising on Bitcoin, and we actually see that bids still have the dominance over asks. So there are still way more people putting bids into the order book now. You do want to be careful of this. Because Bitcoin, as opposed to altcoins, does have a higher potential for the order book to be spoofed. But if we actually look at the market depth ratio, which is what I'm talking about, it actually improved. It's to the upside, 6.79% to the upside. So that is actually, for data metrics, a good sign. It's a good sign. We see that looking at 1 day, bids have remained above asks all day long. If we look back at our 7-day, we can actually see here prices moving up when bids are above asks. This is vchealth.io, guys. And when asks actually overtake bids, price moves down. And when bids overtake asks, again, price moves up. So this is still good to see. Looking at market depth, doesn't look too bad. Market cap continues to slide down a little bit. We started off the week with a market cap of about 68 billion for Bitcoin, right now sitting at about 58 billion. So over the course of a week, about $10 billion has been chopped out of the market cap. Whatever, it is what it is. We do seem to look at price as volume is averaging out here. We see that volume is averaging out right here, meaning that we're probably going to get a movement. And right now we have more bullish volume than bearish volume averaged across all exchanges. So we had this nice, real good run up in price right here, a run up in volume, which is corresponding to the run up in price, as we can see right here. And then as price continues to like level out a little bit, we see the volume level out a little bit, and now we see that bullish volume coming in, which is generally indicative of of accumulation, not distribution. So top arbitration opportunities today are between Liqui and HitBTC. I'd be careful about that one, and I'd be very careful about any arbitration to Bitfinex, honestly. Let's go take a look at CoinFarm. We didn't look at CoinFarm, and look at our margin. So last 30 minutes, a lot of shorts coming into the market here, but very low shorts. All these shorts under $1 million. So those aren't significant trades to me, really. Our biggest push was the last 1 hour. So at about, let's see here. So almost an hour ago, about 50 minutes ago, we had about 4 million in the buy. And then following that, we had about 2 million in the buy. And then we have all these little shorts. So we see that there's key areas where lots of people are going long. So if we actually go back and look at about, so 38, that's 60. So about 50 minutes ago, let's go back and look at 50 minutes ago. Yeah, so about 50 minutes ago is going to be right here where we have this massive spike in buys, and what happens? Price reverses. So typically, you're looking at that and correlating it with price action. So when you're moving up and you have that dramatic increase in spike of buys, you're looking to get a retracement. When price is moving down and you see that same thing, dramatic increase in shorts, you're expecting price to move up. Simultaneously, if price is moving down and you get that big spike in buys, then you're expecting price to move up. If you're moving up and you get a big spike in sells. So there's just two ways to correlate that data as well. If we look at where margins are, which is how I've been actually looking at this more interestingly lately, it's about 50-50, 55% of margin positions are in Bitcoin, 45% are in, or excuse me, are in longs, are in short positions. So longs are more margined up than shorts right now, meaning they're less risky, they're less speculative, meaning that the longs can stay in their position more comfortably. This isn't really huge. We look for deviations of like 60 to 40 to look for situations where shorts can get squeezed, and we might potentially be coming up on that, especially if shorts continue to over leverage their accounts. So when you're looking for a short squeeze, this is the best data to go off when you're looking at BitMEX. Let's see here. Anything else? We look at the bid-ask sum, which is basically the same thing that we're looking at with that historical market depth. Let's look at BitMEX within 5% of price and hour. Yeah, rising open interest today in Bitcoin. This is excuse me. Let's go to 3 days. Okay. Yeah, rising open interest still in Bitcoin. Bids and asks still rising. We have this nice big drop off in bids right now and a subsequent rise in asks, but still bids are in the superior. So this is actually going to move us sideways probably a little bit right here in the short term. Looking at how it looks over the 7-day period, we get that same thing. Rising open interest right here, and the interest continues to rise and rise and rise. Bids are still higher than asks actually, and we can see here. Right here, price overtakes or asks overtake bids, and price starts moving down dramatically faster. So we'll just wait to see. A lot of people still entering long positions on the way down, guys. A lot of people still entering long positions on the way down. All right, so there's the data metrics that I'm going to go over for today. All right, let's look at Poly. Darn. Let's just look at it, Bitcoin on Binance, because that's going to have the most volume. I haven't charted this one in a while, so you can see I don't have any lines. But that's, again, because I navigated everything to a new tab, so it would start saving all my drawings again. So once we redo these live, they'll be available for everybody to see. Okay, so this one's already been tested. Okay. That one's already been tested. This one has not. One has. Fairly congruent with that. Right there as well. Where we see some support, we see some pretty strong. Yep. Again, right there. Right around here. And will it be right here? It was respected. Okay, that's about all I see. Okay. All right, I feel fairly comfortable with that. All right, so just to point out the immediate issue that I see with this is that you do have this massive run up here recently, and you have a lot of trapped buyers here. Look at this massive spike in selling volume right here. So you have a lot of trapped buyers in this region right here. So even though this is an LVN, technically, it's gonna be very difficult for price to break over to this. So there's a negative and a positive to this. Because there's a lot of positioned buyers right here, those are all potential sellers. So when price comes up to these areas, a lot of people entered here, anywhere throughout here, here to here. So these 3 resistance areas, but in between these 2 resistance areas, I think is fairly key. It's going to be very difficult for price to break over that range. However, the positive thing is, and that is your previous bearish order block. So let's actually just mark that order block off. That's your previous 4-hour order block. So you would be expecting, if I could short this, you are looking for your highs to get swept up here on lower and lower volume to enter into a short. Potentially is how I'd play this out, because you're coming up on this bearish order block, and you always short resistance, you always long support. But until the trend breaks, and then you enter into a breakout trade. So a lot of ways to do that as well. But yeah, we've got our previous bearish order block right here that we broke down from, and we haven't been able to make it above this. And when we did, we just established a higher area of resistance. So, but again, now you have what's bad about this is that you had a lot of people potentially taking this breakout trade, and all they were really doing is providing liquidity to people who wanted to exit their shorts at these previous bearish order blocks up here. So you've got a lot of resistance to get over here. What's nice about this is that I think that if you actually do break above this order block again to the upside, then most likely you will have enough momentum to carry you up here to some higher targets. And again, since that would put you close to the all-time high here on Polymath, now we have to start doing what is less relative, which is using actual tops as resistance points. I don't like to do that. And I'll say that area right there. So yeah, I think if you are able to actually close a 4-hour candle above this area right here, we're not going to see this again because we're going to be overcoming most of the resistance here in the HVN level. And then I think we're probably going to have enough strength to actually push up here. Now that's a lot of ifs. A lot of ifs are built on that assumption, guys. So just be careful. Just be careful. Let's see if we can get some Fibonacci influence with this bad boy right here. Swing high to swing low. Yep, we got rejected from the 618 Fibonacci retracement, and we fell all the way back down to potentially get rejection from our 382 or 236, excuse me. So if we actually get rejection here from this bearish order block again, it's going to be a double rejection of the 382. Next area you'd look for is to come down to support and potentially reject from the 236, which is telling you that the bearish trend is not reversed whatsoever, and this was just kind of an anomaly. So how would I potentially play this out? Well, there's only two ways I see to play this out, honestly, Bro Cephas. The way that I see to play this out is wait for a potential break. To the upside right here above 40.53, which is also going to be your 50% Fibonacci retracement. And then you're going to be able to target areas like 42.56, 47.50, and 51.13. Those would be your upside targets. So breakout entry, you know, you've got about 25% on the table. But again, I'd probably be doing 5% scalp. So maybe something like 60-30-10 is generally the split that I like to take for target positioning for 3 targets. And again, you can create different targets here if you want. You can target the fibs if you want. Like you can actually push that 42.56 up to 43.62. But the reason I target swing low areas like I do, and the reason that I target the wicks, is because in my experience, if you actually target those areas, you're likely to actually get your orders filled. And it's about getting the meat and potatoes of the trade, guys, and not necessarily all the time catching the heads and tops, or the tops and bottoms. So let's see here. That'd be one way to play it out. I think that if you get rejection here again, more than likely this is fairly negative. You've got you have this period of consolidation. You do break on high volume, man, and you do seem to be having lowered volume though, man. Like again, the moving average volume is trying to account for this big spike in volume right here. So you do actually have a movement higher on less momentum, less volatility, but on higher volume. So it's hard to predict whether this is going to be a sustained movement or an unsustained movement. The current 4-hour candle is potentially a hanging man candle, which is typically a bearish reversal candle. So if we actually reject from these levels, I would consider that a true rejection of this bearish order block, even though like we see Polymaths like made a good college try of rejecting once, twice. Having a fake breakthrough 4 times, 5 times, break of this area. So is it possible we hang out in this range? Yeah. Could you take a speculative entry here at the point of control? Yes, you could. But I would, man, I don't know. The way that I would play this is either look to enter at these lower support areas. So looking for what's already been swept. This has been swept. This hasn't been swept yet. So I think the next area you'd be looking to enter is probably down here around 26.89. But if you wanted to do the 2x ATR from the point of control, which I guess is valid as well, that's no problem doing that. Now, this is the problem that I've been trying to tell you guys about with using with using ATR. So I have to use actually chandelier stops or trailing ATR to actually be able to calculate this well. And it just becomes kind of a pain in the butt. So where's our point of control right here? Our point of control is right here at 3292. And 3292 volatility was, let's see here, out of the way here, was at about 1.5% was volatility. So 49 Satoshis. 49 Satoshis. So that's going to, let's just call it 50. So 100 Satoshis would actually be where you'd actually be wanting to enter from the point of control. So Satoshis would put your entry right here. And managing risk at 175 Satoshis. Oh, 75 from here. Would be putting your stop loss right there. So that would be a good speculative way to play it out. That would be putting your entry at 31.94 and managing risk at 31.24. And then you can also repeat that with your, you've got entries here as well. So you can manage risk depending on what, but you can't calculate that. You can't calculate your stop loss until you get down here and actually see what volatility is doing in that range. So yeah, looking for the potential breakout trade, and then at that breakout trade, just using 3.5 volatility right now, just to split the baby. Why not? Just to have something to talk about. Magna mode off. Suffering suck attack. 3.5's actually 13% to the downside, so that's rough, man. And to the downside would have you managing risk here. That's fairly untenable to me. So taking the breakout trade, I'd actually just use this wick right here. Bam. I'd use that wick to manage risk. So waiting for a 4-hour candle close above, let's just call it, what did I say right there? Come on, baby, don't rickroll me. Above 40.53 to take that breakout trade, and then managing risk right here at 39.22. And then you can target areas like 42.56 and 47.50. So that's not terrible R to R, especially for take profit target 2. You're managing risk here. That's a 4.92, and that's still, it's almost a 1.5 risk to reward ratio. So sometimes you got to take what you can get. I would be tentative about entering it right here, though, just based on supply and demand, guys. Now, whether this like goes up and people are like, "Oh, Justin, you missed out on a trade. You led us wrong." Well, that's cool, dude. It's just risky, man. Just risky. I mean, look what I'm seeing, dude. You've got, 5 times rejection with only 1 fake breakout. I'd much rather wait and see the actual rally and the close. Now, another potential way to play it would be, look, you've got your point of control right here. You got your HVN, okay? If you see it, and you kind of already see it here, you see this pullback right back here to the HVN and close above it. So if you wanted to get into the trade here, like that would be okay. But the problem with that is, it's your decisions with trading, guys. But the problem with that entry is that where are you going to manage your risk? Well, the only good way to manage your risk here would be below the point of control. Probably right here at 31.94, where you really want to enter into the first, where you really wanted to enter in the first place. And that's giving you some pretty gnarly drawdown, man. That's 10% to the downside. To target 6% to the upside and 20% to the upside. Now, yeah, that's great. Like if your upward target makes it, but you've been rejected from here. Like the likelihood is that you get rejected from here because it's happened 1, 2, 3, essentially 4 times. So I guess the better way to manage risk, the only way that I can see it, but again, you're running the likelihood of stopping out, is to just manage risk here. At 34.60, you could manage risk there. That would give you a 1-to-1 ATR if you're targeting your first target right here, and not bad if you're targeting your second. So that's going to give you, if you're entering here, that's going to give you about 3.30, about 3% drawdown, and you're expecting 6% to the upside, and from there another 12%, so 18% to the upside. So a lot of ways to play it, man. A lot of ways to play it. Just all comes down to what you feel comfortable with and what your management strategy is. So let's label these. And again, I mean, one of the things in trading, man, is if you're gonna get into a successful position, man, sometimes you get stopped out hella times, dude. Just is what it is. Take a lot of small losses and you have a couple big winners, man. Gotta take profit targets. And here. And even potentially here. Here. So I'll publish that. I don't have a VPN on. Baxter, you know I don't speak Spanish. Never gonna give you up. Okay. And Mr. Link. Make sure I saved that. Saved, yep. And Link, what do you got for me? I had charted this out too. Now I gotta redo the whole thing. Shoot. I got 4 minutes and then I gotta get the hell out of here. Sorry, guys. That was a key level right there, buddy. This is another one right here. Fuck. Start thinning out down here. There, yeah. There we go. There. Here. Got your regular resistance areas right here. Off. Just say here. Here. All right. Okay, so I'm of two minds about this because first off, this looks like a healthy retracement back down to the high value area. So this is the area where you could expect the bounce if this is going to remain potentially bullish, guys. So you've got some good ways. Like you could be looking to enter into these areas and just setting a 2x, 3x, 3.5x ATR stop. Not bad. The next area that you're really going to be, if this breaks down from this area, so I'd say if we sweep this low, because we already swept this low, so you don't get a double sweep. But if we sweep that low and we close below that, more than likely we're going to be entering into this area right here. And man, ATR is super, super up there, dude. So we'd have to wait until that area. But yeah, I mean, our average volatility 3.5x is 34.41%. So you would have to be setting your stop like, yeah, dude. It's hard, man. It's hard. So you're going to have to be setting your stop much more conservatively if you can't suffer that drawdown, or you're looking to pretty much buy the bottom on your way down, like get a little bit here, double up here, double up here, double up here. I don't like to do that with altcoins, man. Like, you know, I tried that with a few speculative positions. It didn't work well. It didn't work well for most people. It did in 2017. I guess we'll see how 2018. I guess we'll see how 2019 plays out. Bitcoin creeping around down there. So let's go to the lower time frames. Kind of a something like a this. Kind of a something like a this. You could use this. So looking at this, you're actually, based on your 4-hour time frame, you're actually in a little bit of an LVN. So looking right here, looking at this resistance level, if you get rejected from this level right here, which is previous support, which is going to turn resistance right now. If you get a rejection from this level right here, or roughly like right around this area, because you have a bearish order block right here, which is also this little parallel channel that I plotted out for you. Let's fix that right. Oopsie boopsie boop. Oh, there we go. So yeah, if you get a rejection from this area right here, and then a rejection from this area right here, you're going to be entering, you're going to be entering low volume node territory, and you're not looking for price to get picked up, this is the same as the daily chart right here. You're not really looking for price to get picked up until you can hit down to the top of this HVN right here around 5350. So that's another 20% to the downside. Now, if we are actually able to close above and hold this level and this level right here, then you could probably look for a retest of our previous resistance, of our previous order block that broke down, or our previous HVN that broke down. So I'd wait and see how this, so those numbers are to you guys. If we're able to close fairly strongly, a 4-hour candle above 64.87, I would probably be managing risk below. Let's see here. So on the 4-hour time frame, our is about 7.24. So if you're closing here, you're wanting to manage risk right here underneath your swing low. About 6,007, and so you're looking for that close above 64.87, and you could look to potentially target short-term targets, bud. Not a whole lot, man. A whole lot, bro. Be safe. Yeah. Sorry, it's a cluttered mess, but my time's crunching, man. I got stuff going on today. I got to be off here at 1 o'clock. So yeah, if you're able to close fairly strongly above 64.87, I'd take that potentially that breakout entry, and then you've got your take profits. But honestly, this is like I love Link and I have to trade. Honestly, not for me, but for anybody that wants to take this. It's pretty speculative. This is like in my 9 out of 10 risk range right here. So just to denote that, I'm going to put a checkered flag here. Breakout entry, take profit, take profit, take profit. Managing your stop right there. Otherwise, rejection from this area, and you don't have support until 49.82. Alrighty, Whiteys. That's all I got, guys. I'm gonna miss a whole shitload of chat, man. Auto Crypto, thanks, brother, man. Link looking real bad, yeah, man. Hey, Malicious, I'll probably hit you up in the voice chat so we can talk about that more. I think it's probably a good idea that if you have a long bias on ETHUSD and ETHBTC to short ETHZ18 as a hedge. Because I think that ETH to BTC will probably continue to devalue actually at this point in time, even with ETHUSD moving up. But yeah, when I get some, if I get some time later on, I'll hop in the day trading voice chat and we can talk it out, brother. All right, hey, thanks everybody, man. Thanks everybody for watching us today. You guys have been fantastic and awesome, man. I'm sorry if I missed a whole lot of chat, but I got to be running, guys. So let's pay the bills real quick, guys. So let's talk about the most important thing you guys can do today, except for watching the show, guys. You guys can head on over to cryptocurrency.com, guys, and for absolutely no charge, feel free to join our cryptocurrency community, guys. Bring you right to the Discord. We've been slacking on that, but we put out free signals once or twice a week. We got technical analysis. We got general voice chat, talk about any materials there as well. Get notified when we go live, anything you guys would need, plus just a good community of traders and people who are interested in cryptocurrency, guys. So we'd love to see you in there. Join the Discord. This join trading group now is actually going to bring you there, I believe. Hopefully that's right. Scott had changed the website around a little bit. It was just a big blue button right here. If you guys want to support the stream and support the show, a whole lot of ways you can do it. By the way, thanks for the 3 subscribers on Twitch so far, guys. Really, really appreciate that, guys. So yeah, you can head on over to Twitch at twitch.tv/crackingcrypto and give us a follow or a subscription on Twitch would be highly appreciated, guys. Give us that subscription and thumbs up on YouTube. Obviously, we appreciate it. You guys can pick up some merch, guys. As you guys know, it is scientifically proven, I've gone over it before, that accessories, mugs, and drinkware, that if you drink your morning coffee out of a Cracking Cryptocurrency HODL mug, you will be 80% more attractive to the opposite sex. I mean, it's locked in there. This is the one that I have, except for the HODL Bitcoin. I have the HODL Cryptocurrency mug, or excuse me, the HODL Cracking Crypto mug. Let me tell you, man, coffee tastes about 95% better out of it. Just so much winning, guys. So feel free to pick up anything. Scott did a great job with the Scott did a great job with the store. I mean, there's everything you could possibly think of here, man. And the material is really good, man. Really good. I just got the HODL shirt and the Cracking Crypto logo shirt myself. Honestly, it came and I was wearing them yesterday. I got the orange and the blue one, so I'll probably wear the blue one tomorrow, guys. If you are interested in joining the Cracking Cryptocurrency trading group, guys, you get access to the private chat room. You get access to once-a-week webinars with me to go over trade strategy and setups. You get access to all Cracking Cryptocurrency trade group setups and signals. You get access to the VIP day trading voice chat. You get access to our resource library, which we're adding to more every week now. And yeah. Yeah, hell yeah. So go check that out, guys. If you are interested in improving your trading skills and following along with us in the Cracking Cryptocurrency trading group, or you can DM us and ask us any questions on YouTube as well. Dan Brister, thanks for the sub on YouTube, man. If you guys have any questions, as always, you can leave your thoughts, questions, opinions, sarcastic remarks, and death threats in the comment section down below. DM us on Discord, or you can email us at contact@crackingcryptocurrency.com, or fill out this beautiful request form, guys. And it will come right to us. We do reply to all emails, DMs, even death threats, but we do respond to death threats by calling the FBI. So you guys have been fantastic. I hope you enjoy your day. Let's go, baby Bitcoin. Let's go. And as well, as always, guys, trade safely. And thank you so much for the viewership and follows, guys. Peace out, guys. Trade safe.